Hi guys and welcome to our video for today the 15th of December 2025. So let's go through this watch list then, currently at 12:50 p.m. Eastern Time, which is the top trending stocks for today using our Atlanta Trading Most Traded channel and our Atlanta Trading bot alerts, finding the most trades take within each stock and therefore showing the real volume and real interest across all US equities, as well as the bot alerts which help us find the best news plays and the highest volume fluctuations in real time per second. So let's go through this watch list then, and we're going to start with AMCI here. So starting on the 5-minute time frame on this one, just assessing it for a day trade. Probably be waiting for a break of 8 on this one, as we're going to converge and draw a falling wedge for consolidation here, and a break of 8 should see it run at least 8%. By the time you're seeing this video, it probably would have already came in. However, if you're in this and you want to use the 5-minute time frame for a stop loss, if we lose 6, in my opinion, we're going to come lower to not only beneath there to test the 200 EMA and 200 MA, at around 5.6 and 5. Again, these will keep on going up in price in terms of representation of where they are, as we're on the 5-minute time frame here. But we're going to come lower, and then we're going to probably come to 4.5 to test the next support, which is a big drop. So if we lose 6 on the 5-minute time frame, might be best to cut losses there, unless you're happy with a further drop down to 4.5. Again, be waiting for a break of 8 on this in a mature falling wedge consolidation to 3 touches beside the wedge on the 5-minute time frame for a move of 8% minimum. So let's take it to the 4-hour time frame anyway, and look for a shorter swing assessment on this. So unfortunately, we've got 10 as a resistance, and not only that, we've got the 200 EMA at around 9.8, and then we've got the 200 MA at 10.8. So anyway, that means around 9.8 to 10.8 is basically a range of resistance, and until we close above there, I would avoid that for a swing trade, because we could just currently be getting rejected from there and then dump back down tomorrow. It could just be a random pump up and then reject into the 200 EMA, 200 MA and this 1 day resistance of 10, then come back down and your trend is done and you're at a loss as a result. So I'll be waiting for a 4-hour close over to engulf these two lines and the resistance. So 4-hour candle close, a green one, over 11, over 11. I'll say, full continuation on this for an entry for a swing trade. And you'd expect this to go above 12 and probably come towards the next resistance of around 15 on this one. So a 4-hour candle close over 11 should see it continue towards 15. And until you get that candle close, I would avoid it. And not only that, you're getting rejected off the 60 EMA here, around 8, as well as the resistance of 8 as well. So keep an eye out on that one. On the daily time frame, it just compounds the fact of this resistance around here. So we've got the 200 exponential moving average at around 10.5, and we've also got the 200 simple moving average of around 11. So again, once we get a daily candle close over 11, not only a 4-hour, you'd be looking to enter this and look for a position, and again, it should easily blast past 12, this resistance here, and come towards 15 for a decent move up around, let's measure it, so from 11 to 15, around 30%, so not bad. But again, if you're on this, check the 5-minute time frame, because if we lose 6, it's coming back down even further, and this one has been downtrending since over here really, the 21st of October, as you can see. That sort of trend. So that's AMCI, so be careful on that one. Probably best for a day trade on that. Again, needs to break 8. Then if you're late watching this, watch for a day trade of breaking 10, and keep an eye on that 4-hour and 1 day time frame. So next we're going to go to MASK. So again, made through our watch list using our special methods. And we need a 5-minute close above 0.57 for a move of plus 8% minimum, in my opinion, coming towards to retest this high of day of 0.6653. We should measure out to a plus 15% move around there, potentially for a double top. And until then, I would avoid it for a day trade, to be honest. Currently below the Bollinger Band Center, currently losing the 60 EMA, and it's trending down. And if we don't manage to pick up quickly enough, probably going to come back down to 0.35, to be honest, and that is a big drop. So I'd avoid this for a day trade unless it breaks over 0.57. But going to the 4-hour time frame now, we can look for a potential swing trade on this if you want to hold this overnight, or for a couple of days for a shorter swing trade using the 4-hour. And again, it's just the same story as the previous. So we're currently getting rejected from around here, the 200. I want to say this exponential simple moving average at around 0.64, and not only that, but getting rejected from 0.7. So I'd avoid this for a swing trade as well. It's more of a day trade, and I would only enter a swing trade on this using the 4-hour time frame if you have a green candle close above 0.7 for an entry. And I expect us, to be honest, to come down to 0.35 if we lose 0.4, I would say, on the 5-minute time frame. So again, you can use that to help apply your stop loss if you're in this, and I would avoid it for a swing trade until we get a 4-hour current candle close of 0.7. So you keep it on watch if it's something that you want to trade. And then go into the daily time frame. Again, I'd look for a daily close over 0.7 because we're just getting rejected straight here from the 60 EMA for a death cross retest, this thick gold line, as it negatively crossed the 200 EMA and 200 MA previously over here, all the way over here in July. It's just retesting this death cross. And until we get a daily close over the 60 EMA and 0.7, our resistance, then I would avoid it. But however, if we do get a push beyond there and a close above there, it easily comes towards $1 in my opinion, and that's a plus 40% move. So keep your eyes peeled on that one, MASK. So hopefully that was some benefit to you. And to finish up here, we've got RADX. It's a bit more of a mid-cap, this one, so maybe more applicable as a swing trade. So let's look at the 5-minute time frame first, though, for a day trade. And for a day trade, I'm just waiting for a push over 14 on this one, so it's converging in a 30-minute falling wedge. And once you break above 14, probably be looking for a move of plus 6% on this one. 5-6% is larger in price, therefore the movement might be less volatile. However, double checking that, you'd be waiting for a plus 8% move actually if it broke 14, so it's a good one to keep your eyes on. So again, in a 30-minute falling wedge, by the time you break 14, you're going to be above all moving averages, the Bollinger Band Center, ATMA, and all the ones down here, the 60 and 200s. And then come into the 4-hour time frame. It's just a bit of a loose con in this, as it's got a random jump up. So if we turn on extended hours, you're waiting for a 4-hour close over 14 for an entry in this one, as it harshly rejected here. As you can see, no candle body closure above 14 from pre-market to now. And when we do that, we would continue to trend up. And to be honest, we should magnetize towards this up thrust over here of $27 if we get a 4-hour candle close over 14. So I probably will keep this on watch for the rest of the week. And that is a big move because it's a move of plus 90%. So if you get a 4-hour candle close above 14, I'd be looking to enter this for a swing trade. However, if you're already in this, be careful of losing 9 because you're going to come and test the 200 exponential moving average and 200 simple moving average. That comes to 8.5 and 7.4. But the thing is, these will move up every 5 minutes. But I do think if we lose 9, we come in for 7.5 anyway. So if we get a 5-minute candle close beneath 9, probably cut your losses in that one. And then taking this daily time frame to finish up. It's just currently just a red candle on the daily time frame. However, we're above the 200 EMA and the 200 MA, these two thick white lines, which is good. But it's just a random gap up. So again, I would wait for a close above 14 on the daily time frame on this. And to be honest, the weekly may tell us a bit more on this. Let's go to the weekly. So we've rejected from 14 once because it's a really new chart, and we've not come to retest it since, apart from today. So if we get a weekly close over 14, you'd be looking for a long-term swing trade in this. But I think it's more applicable in the 4-hour. So if you get a 4-hour candle close over 14, be looking for an entry for a swing trade in this one because you'll be continuing up towards 27, in my opinion, on this. But again, a 5-minute close beneath 9. If you're already in this, that's where I'd look to cut losses on this one. So yeah, hopefully this video was some benefit to you. So make as many notes as you can. And if you want to get seminars telling you how to do it, extensive trade reviews on how we take the trades, publicized trading journals on how we keep our losses down, as well as swing trades, day trades, and options trades, you can check us out. Link in the video description and in the Twitter bio. So thanks guys, and catch you all tomorrow for another day.